All righty. Good morning or good afternoon. It's actually high noon here in Salt Lake City. My name is Barbara Armstrong. I'm a coach with Schwab. And today we are talking candlesticks, my friends, in getting started with technical analysis. And specifically, we're going to look at how one might use candlesticks to identify opportunities, investing opportunities, trading opportunities. So that is our topic for today. I also have kind of an exciting announcement. Now, some might argue that I'm easily excited, but I came up with this idea this morning and you're going to see it start next week. So hang tight because I'll announce that in just a minute. If you are not following me on X, as AP514 is, I invite you to do so. My handle, Barbara Armstrong CS. We have the privilege of having Brent Moores with us here in the chat today. He's a friend and a fellow coach, and I have learned a tremendous amount from Brent. So if you aren't following him on X, you are missing out, my friends. Brent Moores, CS, be there, be square. And if you've got any questions, don't hesitate to type them into the chat. This is an introductory level class, so there are no bad questions. To me, the only poor question is one that you didn't have the courage to ask. So feel free to flex your fingers. It's going to be a very participatory class today. So get ready to be typing things in. Okay. So just before we get out to our presentation and the charts, know that everything we talk about here today is for information purposes only, not to be construed as a recommendation on the part of Schwab or myself with respect to any particular chart pattern or investment strategy. We use the Paper Money software application on the Thinkorswim desktop. We'll be looking at a lot of charts on that platform today and placing a couple of example trades. But just know that paper money trading, if you're successful, doesn't guarantee that you're going to be successful. If you go to a live account in a later time period, your results could be different. And while we focus on technical analysis here in this class, other approaches, including being aware of what's going on globally, what's going on within our country, earnings results, fundamental analysis, all can help us make a more informed decision, right? Right. Okay, so having said all that, we have created a 9-week series here. And today, for the first time in a long time, we're going to talk about candlesticks and only candlesticks. And so that's what's on the menu for today. And so we're going to look at some candlesticks basics. Is there anyone here for the very first time? Or anyone really not familiar with candlesticks? Because we're going to look at some basic concepts around candlesticks. We're going to look at some candlestick patterns, and then we're going to use those patterns. We're going to go out, look at those patterns on the chart, and then use some candlestick patterns to practice some example trades. Now, one of the things that I wanted to mention is that I thought it would be a great idea because really there's a huge amount we can discuss when it comes to candlestick patterns. And so I am going to start a new mini series called Technical Tuesdays. And the first thing I'm going to address in Technical Tuesdays is candlestick patterns. And so watch for a new playlist to appear. I believe we'll call it either Technical Tuesdays. Someone suggested let's get technical, but they're going to be very short videos, 2 to 5 minutes long, and we'll pick one candlestick pattern or one pattern like an inverted head and shoulders or a double bottom or whatever it might be, and just look at a specific pattern. So there'll be like technical trading snacks, if you will. And so once I have the first one, you expect to see the first one next week, and then we'll post a new one every Tuesday. So that's the current plan. So stay tuned for those. I will post them on X also every Tuesday. And I know that when I first started trading, had something like that been available for me, like I would have been eating those up like candy. So anyway, it looks like there's some positive support in the chat for this. And for this particular series, there is a playlist. for the Getting Started with Technical Analysis, and Brent will post a link to that for you in the chat. Okay. The other thing that I wanted to mention is that 2 weeks ago, we did a class called, in the Getting Started with Technical Analysis series. And just let me find it here because I brought it up. Let me just bring it over. And this is why you'll want to subscribe to this channel. If you haven't hit the subscribe button, you'll want to do that. So 2 weeks ago, we did a class that I called Stocks Using Trend to Create a Trading Plan. And I promised during that class, and there were about 1,500 of you here that day, or 2,000, I promised that I would create an example trading plan. And I did do that. And so here is the playlist. Actually, I can just post this in the chat. Oh, well, Brent beat me to it. He's already posted it. So we've got that posted. And there will be a link posted in the show notes down below if you're watching this in the archives. But I did create an example trading plan. And this is the, Schwab Coaching webcast series, page on YouTube. So if you go to playlists and scroll down to the trade management mini sessions, you will now see, as of yesterday, there's a simple stock investing plan that is basically a summary of what we talked about 2 weeks ago in our Getting Started with Technical Analysis class. Okay, so now back to our regular programming. So if you are brand new to candlesticks, and back in 2011, I was brand new to everything. And like Frank is saying, I could use some schooling with respect to candlesticks. But this here is what we call the body. It is today's candle. And it shows the relationship between the open and the close. And, so if we open down here and close up here, it's a bullish day. If we open at the top and close at the bottom, it's a bearish day. And we're going to talk more about that as we go. But these lines here are considered to be, what we call them is the wick. So here's the candle body and here's our wick. And if you've been following me for a while, you'll often hear me talk about my frustration of a stock gapping down and, we get nicked out. It just touches our stop loss order, which triggers an order to sell, and we get nicked out on a wick. And then by the end of the day, the darn thing has rallied and closed such that we wouldn't have been stopped out at all. And, hence the frosting of petunias and all of that good stuff. But, body and wick. And sometimes you end up with a candle, that's largely wickless. And then sometimes you can end up with a candle that has a very tiny body and really large wicks and kind of everything in between. When we see something open down here and then close higher, it will either, depending on whether you're using candle or candle trend, it will either have a green body or an open body. Okay. Or kind of a clear body when we have what we call a bullish candle. Now, if we have a red body, or, on some charts, it may show up as a black body, then we've got a situation where it opened higher and closed lower. And what this the high of the wick and the low wick means is that during the course of the day, and we can see this if we go to a 1 day, 1 minute chart, but it means that during the course of the day, it opened here, and it may have kind of come down here, and then it came up here to the high, came down here and hit a low, and then ended up closing here. But at some point during the day, it went this high and this low. And that's how we see this on the chart. And on my chart, this would show up as a red candle. The body would be red. So it just depends on what you want your candles to look like. You can customize them to look differently. When I started, I chose the same patterns of the webcasts that I followed of those instructors because I wanted my chart to look like their chart. You know, learning how to trade was confusing enough for me. So I just wanted it to make it easy. Okay. Yeah, so somebody is saying, Kevin is saying, you know, some will call the top part a wick and the bottom a tail. You know, I call them both. Okay. I call them both wicks, but that's personal preference. Now, when we're looking at a candle, can we see some glimmers of support and resistance? I've got this weird thing happening with I may need to get a new mouse. Let me just try and get my mouse working again. It's very frustrating. Okay, here we go. My mouse has returned. So this is a bullish candle. And, you know, when something either gaps up or we see a candle like this on the chart, say at a support level, we would consider halfway through the body to be considered a support level, what we call support level 1. So this would be support level 1. So if you were looking to put a stop in and make it tight, you might say, well, I'm going to put my stop below this S1, because if this doesn't go the way I want it, I want to get out quickly. Now, others might say, well, I'm going to use the base of the candle as a support level. And I'm going to put my exit there. Or maybe we want to do some type of option trade where we want to place it below these support levels. And so you might say, well, I'm going to place my trade, if we were doing something called a short put vertical, where, you know, our expectation is that the stock would stay above this strike. You know, and some might look at this and say, well, hey, if I put my strikes down here, I'm below 3 support levels, and all 3 of these support levels being represented by this candle pattern. And then on the flip side, if we look at a bearish candle, so this was bullish, and this is bearish, that this could be acting as a first level of resistance halfway through the body of this candle. The second resistance level, or resistance level 2, would be the very top of this candle. And remember, here was our open and it fell and closed here. Okay, and that the top of the wick would be considered resistance level number 3. So if we're sticking with our short vertical strategy, if we wanted to do a short call vertical, you know, and the idea of a short call vertical is that for the trade to be profitable, the stock has to continue to trade below this strike that we have sold. And on the short put vertical, we want it to stay above. So, but these could be construed to be support levels and resistance levels. Okay. And so, like, if you were buying a stock here on the bullish side, you might say, well, I'm going to put my stop below this support level 3. You know, because we want to give it a higher probability of allowing to continue to go to the upside. So we want to give it a little more room to move. You know, and that's, you know, depends on the stock, depends on this candlestick in relation to the rest of the chart also. Yeah, so you can place a stop, as Brent has said, when you're trading a stock, when you're buying a stock. Okay, so let's clear that. So, does size matter? And the answer is yes, size does matter. Because when you see a large candle, whether it is bullish or bearish, if it's a large bullish candle, that indicates heavy buying. So when we see a really big move, that indicates heavy buying. Okay. Now, when we see a small candle like we do here, it's saying, hey, the buyers and the sellers. So this is a white candle, so it's still bullish. So the buying pressure still beat out the selling pressure, but by far less than it did the 2 previous days. Okay. And how do you define a big candle or a small candle? Well, it's in relation to the candles around it. And then if you have a candle like this, we call this a doji. So, we opened here, closed here, or, at basically the same spot. And the buyers at some point during the day drove the price up. And then the sellers at one point in the day drove the price down. And at the end of the day, we ended up right where we began. So they duked it out and they ended up at a draw. And if this happens when we're getting close to a resistance level, that could be considered, that the winds of change are upon us and we might expect things to pull back. And if that happens at a support level, then, after a stock has been downtrending, we get a doji type pattern, we might expect, the stock to start moving up. But these large and small terms, they're relative. Okay. Okay. Now, when we have a large black candle, or on our charts, a large red candle, what does that mean? Well, it means there are a lot more people that are interested in selling on that particular day than buying. So when we have a large candle, and we're seeing lots of large red candles on some charts today, that means there's a lot of people selling. Now, if it's a small red candle, it's saying, hey, there's slightly more people selling than buying. And again, then if we see this doji, it's kind of a draw. Okay. And again, large and small, these are relative terms. Large, small, large, and small. And you just look at it in the context of what else is happening on the charts. Okay. Oops, just a sec. I just want to. Okay. Hold on. I just lost my chat. Okay, there we go. Okay. Now, I posted something very similar to this on X this morning, kind of a cheat sheet or a summary sheet, a summary sheet. And I don't know why. I guess I'm an optimist at heart. But I always think, I learned the bullish candlestick patterns first. And these often happen where? At a support level. And so when we see this pattern happen at a support level, we call it a hammer. And it's an indication that this pullback may be complete. So we have a hammer and an inverted hammer, which is just an upside down hammer. And the color of the candle can be either way. It's still considered a bullish sign. Now, if this happens at a resistance level, it's a sign that this uptrend may be drawing to a close. And we call that, what is a hammer at the support level, we call a hanging man at the ceiling. And what we call an inverted hammer at the support level, we call a shooting star. But the candle looks the same. The reason we change the name is just in relation to where it is on the chart. Okay? And then this we call a piercing line, where you have a red candle, and then the next day you end up with a bullish candle, or, you know, a candle that opens lower, closes higher, and that goes at least halfway through the body of the candle of the previous day. Now, what we call piercing line, if it happens at a resistance level, we call that dark cloud cover. So you have this really nice uptrend, and then you get this big fat red candle that it goes at least halfway through the bullish candle of the day before. Okay, so this is, you know, the idea of the piercing line in the dark cloud cover is that it goes more than halfway through the candle. Okay. And then what about this engulfing? Well, we call it bullish if it happens at a support level, where this candle totally engulfs the candle of the previous day. So this is a 2 candle pattern. Now, this happens at resistance, and we have, you know, our uptrend, which is, you know, rudely interrupted, if you will, by a candle which totally envelops or engulfs the candle of the day before. We call that a engulfing pattern. And I think technically, and you know, this is, so Gazelle was asking, is it including the wick or just the body? Here, this is the body of this candle engulfs the body of the candle the day before. I don't know if the wicks have to outstrip each other, but I'm going to do a little research on that and I'll get back to you. It's probably a more emphatic engulfing pattern if it also engulfs the wicks. But I don't know that you have to engulf the wicks to call it an engulfing pattern, but for sure it has to engulf the bodies. Now, with a Harami pattern, it's also considered either bullish or bearish if you have this, you know, here on the bullish side, when we get to support, you have this big red candle, and then the next day, the body of this candle is totally inside the body of the previous candle. And again, I don't know if wicks are included in these two examples. The wicks are also within the body of this candle. And this is, you know, bearish, where we have our uptrend and we have this big fat white candle. And then the next day we get this red candle where the body is totally within the candle of the day before. Okay. Now, the last one that's on this chart is something we call a morning star and an evening star. And the idea here is that you have this downtrend that's been happening, right? And then we have this candle of, you know, I would call this a candle of indecision. They call that a spinning top or a doji, where the bulls and the bears duke it out and they don't get very far, where, you know, the body of the candle is small and you may or may not have a long wick on it, but it's a candle of indecision where there is no clear winner. And then on the third day, so this is a 3-day pattern. So you notice we went from, you know, 1-day patterns here to 2-day patterns to 3-day patterns. And on the third day, this candle at least goes more than halfway through the body of day 1, the first day's candle. In this case, I mean, it totally eclipses. Now, on this day, we call this an evening star. This is another 3-day pattern where, we have our, uptrend interrupt us in that we have this doji pattern or this candle of indecision. And then this candle goes more than halfway through. So it's kind of like this dark cloud cover, only with a candle in between, where it goes more than halfway through this candle. And this pattern we call an evening star. Well, Gazelle is asking if there are 4-day patterns, and you're going to have to stay tuned for that one, but we aren't going to discuss any 4-day patterns today. Okay? Okay. Oh, somebody's saying that CMG has a bullish engulfing pattern. We could go out and so we're going to go out and start looking. So guys, I hope you have your fingers flexed, because I want you to participate. Okay, so let's go out now and look at some patterns. And somebody mentioned CMG. So let's start with CMG. So, and let's come to a short price, shorter time frame. So go ahead and type in what you see here on this pattern. Okay, and I know that this takes a minute to show up, but this is considered to be a bullish engulfing pattern, right? Just one sec. Right. So this is our 2-day pattern here. And the body of today's candle is totally engulfing. Yeah. John and AP 514 and elect. I don't. Well, we could also, and sometimes things are not just totally one pattern, right? So somebody's saying, could we call this a morning star? And you know what? I didn't see that. I just saw the bullish engulfing, which is this 2 pattern. But I think you could well be right in that this is approaching this halfway mark here. But this pattern, so there's our, morning star pattern potentially, and it's still a live candle, so who knows where we'll be. And then here's our bullish engulfing. And then somebody's saying, well, and for a 1-day pattern, can't we call that a hammer? You're right. And so, there are 3 answers here that I would have to give credit to. So, thanks for mentioning that one as an example. Now, how about we look at, oh, sorry, I've got to close this. How about we look at ADI? So if we're playing I Spy, and this isn't so much today's candle, but when we look at these patterns, what are we seeing? Well, first of all, we have this shooting star, don't we? And then if we're just looking at bodies, we're looking at an engulfing pattern, but I see this shooting star. So if you owned this stock, might this be a place where one might consider selling a covered call if you still wanted to own the stock? Yeah, somebody's saying 3 black crows. So we're not going to talk about that pattern today, but stay tuned for our our Tuesday technical Tuesdays, where we will talk about these. Yeah. Somebody's calling these 3 crows, where you have 3 down days in a row. But what was our first tip that this really bullish run, like, and we went from 200 to $247 in 1, 2, 3, 4, 5, 6 trading days. And then all of a sudden we have this shooting star, bearish engulfing, and then somebody saying, 3 black crows, which we didn't talk about today. Okay, let's look at another one. Let's see. How about we look at Fox? So I just have to close this. And when we see Fox, what are we seeing? Go ahead and type it in. So the first pattern, like the first candlestick, that's just looking to me like, a bull flag continuation, right? When I look at that, like right off the hopper, I'm thinking, okay, we have a stock that's been uptrending, bull flag, close above the high of the low day, which we talked about. Sorry, my handwriting's atrocious today. This day, which hit a new high for us. But now today, what do we have? Bearish engulfing. You guys, you got it. Bearish engulfing. And so if you own this stock, again, and you wanted to continue to own it, might you sell a covered call today saying, this could pull back for a few days. Now, when we sell a covered call, we could be called out at any time. So if you're saying, hey, I inherited this stock from my grandma, I never want to sell it, then don't sell a covered call, because you may end up being called out. And the purpose of this isn't to today's class, we're looking at patterns. How about we look at another one? Electronic Arts. So this is a stock that's been on the struggle bus, right? Like we're seeing it's been downtrending, gap down, and has been trying to make a comeback. But what are we seeing today? And we could call this kind of one of two things, right? So today's standalone. So we have this pattern and we have this one. So what do we call it when it's at the top? We'd call this a hanging man or a doji. Both are totally legit. But the net of it is the bulls and the bears have been duking it out today. And they've driven the price up. The buyers have driven the price up from the open. The sellers have driven it down quite a ways. And so far, they're basically back where they started. So if we looked at a 1 day, 1 minute chart, and then today's candle is inside the body of yesterday's candle. So we could also call that a bearish harami. Yeah. Or a hanging man at a resistance level. Because where are we right now? We're awfully close to the last time, to the previous high, right? It's come up and kissed it. Playing kiss and tell. Like here, the high this day was 134.54, 134.65, like within like 10, 11 cents, 134.12. And as we've talked about in previous classes, supply, resistance isn't a finite number. It's kind of a range. And so it seems to be bonking its head on this ceiling of resistance. And so if we wanted to place a bearish trade, might this be a sign, that we have an opportunity, on a stock that has been downtrending? The answer, yeah, we could. Okay, let's look at another one. How about AT&T? So AT&T has been on a total tear, right? And so might we think this is a bull flag setting up? Or sorry, a bull flag, because it doesn't look like this trend has necessarily changed the overall trend, but short term, might we call this a bearish engulfing? And is it on the verge of being that 3-candle pattern? It's not quite halfway through this body, but it's approaching being an evening star, isn't it? Okay. Well, let's look at one that, and let's place an example trade. So if we look at Walgreen Boots Alliance. So here's a stock that's, it has struggled mightily, hasn't it? Like we can see here that it's fallen quite a ways. This is just on a 6-month chart. But could the tide be changing? Because when we look at this pattern, in the overall context, we're starting to see a series of higher lows. And then we had this kind of falling pattern, but it appears, that we've got, whether we come this way or this way, maybe a diagonal resistance breakout. But when we look at the candle pattern, what do we see here at a support level? A bullish engulfing pattern, right? And so could we do something as simple as maybe buying 100 shares of stock, and then, saying, hey, we're going to sell this when it gets back up to this $13 level. And where might we put a stop? Well, we might say, we're going to put a stop 3% below this diagonal resistance line, which our expectation is will now act as support. Or we could say we're going to go 3% below the candle on this day. That low was 996. Or like I said, we could use this line and then, our support level would be around 1072. And we go, we could do 2%, 3%, 5%. Yeah. And so if we said, well, we'd like this to be our target here around this $13 mark, and we have this bullish engulfing pattern, and then, and it broke out yesterday, diagonal resistance breakout has continued today. Let's look at a stop 3% below this candle. So that would be 996. So let me grab my calculator. So that would be 966 would be our stop. And our target would be 13. And what do I mean by that? Well, if we look at the Analyze tab, this is in the consumer staples sector. And how has that sector been doing? Well, let's come out to the sector indices. And by the way, if you don't have this set up like this or know how to create it, in the trade management mini sessions section, if you scroll to the bottom, there's a short tutorial on how to set this up and customize it. But if we look at the last month, which sector's been strongest? Oh, look at that, consumer staples. And today it's hitting, at least a 6-month high. That's a 1-year high. And so this is in a sector that is showing strength. Okay, so that might be something appealing. And then this stock appears to be trying to make a comeback. Now, the other thing is that some investors might be feeling that they might want to take some profits on some stocks that have moved dramatically and go into something that perhaps is paying a nice dividend. And this one is paying a dividend of 8.89%. Okay, which some investors might also find appealing. And we're not looking to go back to this $22 high. We're saying, hey, if it gets back up to 13, we'd be happy. Can you give us the link? Neelam is asking. That is the trade management mini session link. And I'll put that in the show notes at the end. Let me just see. In fact, I think I have it right here. do, there you go. Yeah, and scroll to the bottom. Anything that is in kind of a turquoise blue here. So these are the mini sessions on the Trader Talks from Schwab Coaching YouTube page. And when you come down to the bottom, here's a whole group. And there's one, here's the customizing a watch list, 8 minutes long. Okay, so I wanted to be sure that we got this trade in. So we're going to come to our trade tab. We're looking at the stock. And we're looking at buying custom with a stop, or actually with an OCO bracket. And, you know, we have a large account here. So we could buy, you know, this is an $11 stock. So we could buy 1,000 shares and not even be close to our max position size on this. And so we're going to come here to good till canceled, good till canceled. Our target is going to be $13. And our exit is going to be $9.66. And this is based on the candle pattern. Okay. Confirm and send. And we're going to put this in our stocks with a target. On the bullish engulfing candle pattern. Okay. So, and there was our bullish engulfing candle pattern. Okay, so what else could we look at? Well, let's say we're looking for opportunities and we look at Verizon, and it's interesting because this candle pattern had changed. It was kind of a doji type of pattern, or we might have, you know, looked at this as, you know, a hammer, or what we call, I guess, a shooting star. Just let me, sorry, a hanging man. You know, that's how it looked an hour or so ago, but this is a live candle and it's now changed. And so you might look at this and say, well, I don't see a current candle pattern that gives me an opportunity to get in. And so you might, you know, change and say, well, let's look at something else. So if we look at AMAT, what do we see? Well, we see a stock that's been downtrending. We see, you know, something that's been using the 100-day moving average seems to be acting as a ceiling. But what did we have here? We had something that fell, tried to recover, and then we got what? We got a hanging man, and then the next day a bearish engulfing. So would either one of these have been a potential entry, you know, signal for a bearish trade? Yeah, they would have. And would this one here have been a potential entry for a short-term bullish trade? Yes, it would have. And then did it in fact move up? It did. Now, does it always work that way? No. And then we get our hanging man and our bearish engulfing, and did it in fact move down? It did. And again, does it always work that way? No. So guys, we're out of time for today. I hope that you have found this introduction to candlesticks helpful. I've enjoyed talking about it. And I think that we have covered what we set out to do. So, and you know, basically we reviewed some of the basics. We discussed the concepts. We went out and looked at some things on the charts, and then we placed an example trade. I ask as we're wrapping up that you hit the like button. It's your chance to do a favor for a random stranger by helping move this up in the YouTube algorithms by hitting like. It also lets Brent and I know that you found this content helpful. So it sounds like applause to us, as Cameron May would say. So if you'd hit the like button, don't forget to subscribe to this channel if you haven't done that already. Don't hit subscribe if you've already subscribed though, or you'll unsubscribe yourself. Don't forget to follow us in the land of Twitter. now ex Barb Armstrong CS and Brent Moore CS. And that's a wrap. Have a really awesome rest of your day. I'll look forward to seeing you in a webcast coming up soon. Take care, everyone. Bye for now.